Good morning, folks, and welcome to another one of my videos. So I have four pairs on watch today. Aussie yen, Euro yen, pound yen, and dollar Swiss. So I'm going to break these down for you. Got a lot to get through. So we're going to start from the higher time frames. So a bit of a messy sequence, but we're seeing that across the board at the minute. There seems to be quite a few messy sequences going on. But essentially what I'm looking for one of two things, but one of the things that I'm looking for couldn't be ready by the end of the day. Okay, so I haven't got that. I am looking for a potential long on this, but until price has developed a bit, if it is going to develop, I'm only looking for the short, given that this is a daily forecast, not a weekly one. Okay, so what I'm looking for essentially is, yes, we have a gap here. Okay, we have a gap to this high, but potentially this could be a phase one, phase two, phase three to take out these gaps here and potentially move a lot lower, so that we get an impulsive leg, a continuation leg, which replicates the length of the preceding one, which if we just measure that would probably line us up somewhere around, there we go. It lines up mathematically with that, so that would make contextual sense. However, because we also have this gap here to this high, meaning that there's still likely stop orders. If people sold here, there could still be stops above here. This could end up being an M-style pattern where price does this, consolidates, and then we move to the upside, and then the volume that's been generated here is enough for this little correction to push higher to potentially tap into that, and then maybe we move to the downside from there. Okay, so that is one potential, and I like the fact that I can see all of this on the daily chart. So when the story is clear on the higher time frames, that's a tick in the box for me. So what we could be seeing here, you notice that we're kind of wicking to this area. This could potentially be that continuation that I was talking about. Okay, where we do something like that. Okay, and this is potentially the start of it, and that's perhaps why we're near missing there, to come back down, to tap into that, to retest all of this volume before we push higher. However, it doesn't usually look, we don't usually let, it doesn't usually start with, an impulsive 4 hour to the downside before we start doing that. Okay, so this is leaning me more on the side because of how impulsive this 4 hour candle is looking at the moment. Of course, this could change. This is leading me more towards price just dropping out back below this area of value. And if it does, okay, you can see the impulse there. What I'll be looking for is, I'm looking for price to basically, I'm looking for this bull structure to potentially fail. Okay, so I'm looking for this to just drop out, and then this ends up being a failed bull structure. Then we're back within this structure, and then typically when these structures fail, they move in the other direction, contrary to what the failed structure was suggesting. They tend to be quite aggressive to the downside. So I'm looking for this to fail, price to drop out back below here, and then I'm looking for a continuation of any description where I can get short just below it. Of course, if this formed just below here, I'd probably have my stop just above to protect me from price, retesting the back end of this and retesting this. Okay, and then I would have significant profit potential. I don't think that holds much weight, but as a first inflection point, by that point we'd have 4%, and then I would target that low there, which would give us, in terms of this whole range, that would be about 90% of the range, or just shy of 90%. So that's where I'd set the take profit whilst trailing my stop loss, and I have an alert set just below this structure to see if it fails. Okay, if we did get that larger structure, then to move to the upside, this would be visible on the 4 hour chart. Okay, so then my 4 hour entry would apply, where I'd be looking for a 4 hour rejection, but that price has got a lot to do. It would have to, if you just look at the time at the bottom of the screen, that would likely be ready tomorrow morning. If you just see it says Wednesday, 6 a.m. So that's why I've not got that forecast on watch at this moment in time. So we'll see how that plays out. Euro yen. So Euro yen, we have, if we just zoom out. And just to say before I forget as well, thank you to all of the messages and comments within the Falcon community and outside of it. I did spend an hour and a half replying to as many as I could yesterday, from about 11 p.m. to about midnight. I was up replying to as many as I could, but I know that this was all within Falcon. There are some that I've not replied to on YouTube. I will respond to you guys in due course and your kind messages. Obviously, there's a lot of logistical things to sort out at the minute. since what happened on Sunday, but I will get back to you guys in due course. So thank you very much for your support. Euro yen, we have an overall zone, so you can see that we have this overall zone, which would represent a good value area of value for a sell. Okay, we're scooping back up to that area, so it's more a decent area as opposed to, I'm not looking at, when I zoomed out to the 4 hour, I'm not necessarily looking at this as a brilliant area for a sell. I'm looking at this overall zone, this area, as a good area for a sell. And we have that kind of potential. If we look there, we have that potential hanging man formation starting there on the daily. As I drill down, you can see that we've spiked above, likely wicked out a lot of orders there. Price is pulling back a bit. So what I'm looking for here, this is starting to look like a continuation. She was spiked above, likely spiked out a lot of the orders. There was, what time was this? So, I mean, potentially you could have got short here. I'm not, given the overall sequence, I'm not really a fan of, I'm not really a fan of taking something like this, and then you end up being tagged in and tagged out, and then price does something like that. Okay, I was looking more really for, some kind of drop up, but potentially you had an entry there which you could have taken. But what I'm looking for now, price is pulling back sharp, but what it's looking like, we just look on the 5 minute. Yeah, it's looking like it's forming just a 1 hour structure. I'll be looking for a 1 hour structure here, and if we just so I'm looking for something like this. By the time this formed, looking at the size of this candle, this would likely be a structured 1 hour continuation. So I would look for that, and I would look for the risk entry within it rather than having a massive stop loss where I could get less than 1-to-1 to here. And then I would target this low here for something in the region of 6%, which would give us that, which would make sense because that would give us that phase 1, phase 2, phase 3. And one of the reasons I would target here, aside from just the messy sequence, is because this low is the start of all of this consolidation, and it's also the retest at the back end of a lot of volume. So potentially we could end up targeting here, reaching this low, and then there's a lot of stop orders. People who bought here believe that this is now support, so there's a lot of stop orders under here. We tap those stop orders and then move to the upside, and then this just ends up being a retest of the back end of all of this. So that would make sense to target that for that reason, and because we would also have, if we just measure it, oops, that's a bit wrong. There we go. Yeah, that would make sense mathematically. Phase 1, phase 2, phase 3, that lines up with that. So I've got an alert set to see if we tap that high, which is what we would need to do for the risk entry to be executed, for my rules to be met. So pound yen, bit of a similar deal. So pound yen, again, it's, the higher time from sequence isn't great, but we have this overall area, okay? And what I do like about this one, what I prefer about this one, is with the gap to the high, price comes down. There's the people who sold here have likely put their stops here. We have another fake sell-off. These people likely put their stops up there. We tap into that, tap those orders, and then boom. Okay, I like the fact that we have, I like all these little gaps, these near misses. Then we tap it, then we move to the downside. This does not look like a buy structure in any way, shape, or form. But with the size of the drop, it does look like it needs a little bit more of a correction. You can see it starting to form here, and the fact that we've got this, there's not really any hook points here. This is making me think that we'll get what I'll be looking for is, I'm looking for a minimum of a 1 hour continuation like that. If it's not structured, I'd be fine with that. So that would be 6 to 8 corrective 1 hour candles. If it's not structured, I'd be fine, because unlike with the previous pair, the green candle that happened after the impulse is only small, okay? So whereas with Euro Yen it's bigger, that's implying that we're likely going to get a structured 1 hour continuation, whereas this little candle here at this moment is suggesting if we do get a continuation, it's going to be a smaller one. But we shall see, we don't know. But I'll be looking for, in this instance, just because of the size of the drop, I won't personally be looking for a reduced risk entry on the break, because if we do get a tight 1 hour consolidation, this is more likely to be, end up something being bigger, at least with the risk entry. If that happens, if we end up forming a larger version of itself, we can potentially manage it down to there. But with a large drop like that, I always look for the the risk entry, and then that would make contextual sense, because we would then have, if you've got something like that, that kind of lines up with that low, which just so happens to be, if we just measure it, just so happens to be almost the 90% area of this overall range, and we have the, you know, a bit of a gap there to there. So that makes sense. You know, for price to carry, for this to carry price a lot further, we would probably need to build bigger continuations along the way. So if we got what I'm forecasting and we didn't build bigger continuations along the way, it's likely that this would be an area where we respond and form that deeper correction, and then rather than sit through all of that, we can just take profit there and reconvene. So that is pound yen. We just move down to dollar Swiss. So dollar Swiss, I've got that last just because it looks the least likely to be ready at this moment in time, because we're pushing down. I've just got it on kind of watch just in case. So again, the sequence doesn't look great on this, but what I was thinking before I started making this video is that sometimes when the sequence is pretty awful, these little structures, these structures within the awful structure, if they're big enough, you can kind of play the range. Okay, so even though the whole thing doesn't look great, if we have a clear structure here, and that, you know, and there's enough profit potential down to these lows, we can just play the range, even if this awful sweet sequence causes price to do something like that and then push up and start tapping into that. There's enough profit potential to be made, like in that area there. So what's happening here? Let's zoom out a little bit. So what do we have here? We have all of this volume. We just zoom out. I can't even see where the, so with that sharp move there, we have all of this. Okay, and prices, what it looks like at this moment, it looks like prices retested the back end of all of this in the form of this 1, 2, 3, this structure there. So we retested the back end of that. Then we zoom in and we can see that, you know, this wasn't looking great there. We dropped out. So with this corrective channel there, we drop out. Price leaves a footprint. Why is that significant? Because this footprint failed to retest the back end of all of this. So a lot of people likely sold there and had their stops just above here, because they believe that now, once we broke below there, they believe that this acts as resistance. So if they think that that's resistance, they'll likely have their stops just above these, and including these people that sold here. And then the clue was that we have this phase 1, phase 2, phase 3, where the 1 and the 3 wave are of a similar length. That implies the completion of a move. If a move is completed here, then what it's likely doing, it's completing where the stop losses would likely be, which means that we'd likely move down from there if we are going to move down, which is what happened. And then we have this potential phase 1, phase 2, phase 3, where if we just measure let's measure this. So if we measure this here, we assume that that's the area of value. Where does that line up? It lines up almost down to here again. So we would be back at the, you know, the base of all of this structure, the hot base of all of this consolidation. So that makes contextual sense. I like the fact that if we just measure this, what do you know? I haven't done this, folks. I'm literally doing this on the fly, but that's what I was anticipating. It just so happens to be a 50% pullback. That doesn't surprise me either. We have these highs here. What do we do? Look what we did, folks. We left a gap. Why did price move down correctively? Likely because the people that were selling there, the orders that were still up here, were dragging price up whilst people were trying to sell this, which is likely why it scooped back up. We're correctively selling off again. So it wouldn't surprise me if we do something like this, move up, and then what do you know? We would have a reversal structure leading into an area of value. Okay, and once again, these people selling here have likely put their stops above here. So people call these things stop hunting. But it's not the market necessarily trying to hunt your stops. It's the market being unable to move until those stops have been triggered. Okay, because if the price action is the mid price of the bid and the ask, and there's a lot of orders up here, then that mid price is representing all of the orders that are up here. So until those orders are taken out, then price can't really move. The mid price is not going to drop, is it, until these orders that are here are gone, because then the average price of the bid and ask, or the orders are going to be lower down, aren't they? Because all these ones have been taken out. So it's not stop hunting. It's just the market being unable to move until certain orders have been taken out. So what I'm going to be looking for is a 4-hour rejection. So if we just zoom out a minute, I can see this structure on the 4-hour chart. Put that away a minute. I can't see it on the daily chart. So therefore, because I can see it on the 4-hour chart, that's the highest time frame that I can see it on. My 4-hour rules apply, which are a 4-hour rejection here or 2 1-hour rejections. Okay, and then, or if we miss that, or it just blasts to the upside very impulsively, and then we don't really get the entry and price pushes down and we get something like this, then I would look to get short on the break or within it, and I would target this low here, which just so happens to be 90% of this range or more or less, which is where price can pull back deeply, 50% of the range, even if it's going to continue in the forecasted direction, which would mean potentially a pullback of 50% of this range before we move, which would mean that I'd have to sit through maybe a 3 or 4% pullback. But that's what I'm going to be looking for, folks. I would set the take profit there, trail my stop loss accordingly. And if that area of value is not triggered, if that alert is not triggered, I do not need to look at this pair at all. Have a great day, folks. I'll see you again in the next video. And if you think this is coming easily to me doing all this with everything that's been going on in my life, believe me, it's not. But the one thing that helps me to stay focused and that moves my mind away from the fear, the vulnerability, and the pain of what's happened in the last couple of days, it's discipline. Okay, it's all of the disciplines that I've learned to do, all of the disciplines that I've been doing, basically giving myself no freedom to do anything or very little aside from the disciplines that I do. And that creates, in my experience, that creates mental discipline. And I'm telling you, if you've got fear in your life or vulnerability, or something's really upset you, something's happened that's really upsetting, my suggestion is create as many very disciplined routines as you can. And it doesn't take this stuff away, but it makes it a hell of a lot easier, and a hell of a lot easier to think straight and feel like the tough guy or the tough woman that you actually need to be, until such times as that fear, vulnerability starts to dissipate a little bit. But anyway, that's my forecast for today, folks. Have a great rest of your day, and I'll speak to you again soon.